When a bull market is hurtling towards its later stages, you want to know when the top is coming in. In today's video, I want to share a theory that we could be about 90 days out from a top. Now, sure, it's almost impossible to time the precise peak, and you should be ideally selling in stages on the way up, so you're constantly locking in profits and reducing your risk, but still we need to think about when to turn really more broadly defensive, and I don't believe the top is in yet for this market cycle, but it could come sooner than most people are expecting. So in this video, I'm going to look at some reasons why the crypto peak could be coming about 90 days from now. Before we get into that info though, keep in mind that this is just one possibility, one theory, and I actually think this is probably more like a local top with a final top probably in like October this year. But all this remains to be proven. I don't have a crystal ball. We're just weighing up various scenarios and theories so that you can have the best possible information to make your decisions. On to the point though, which is that a cycle top 90 days from now gives us a matching pattern with 2021. Now cast your mind to 2021. You're gonna remember, if you were around, that rather than a single blow off top, Bitcoin actually made a double top formation, hitting almost $65,000 in April, followed by a massive correction through the summer, like a disgusting correction that basically everybody thought it's completely over and we're never going to go high again for another 4 years, followed by a final top rally all the way up to $69,000 in November for Bitcoin, with a lot of new altcoins hitting new disgusting highs. That initially suggests we get a cycle peak towards the end of the year, but there's a school of thought that the first peak in 2021 was actually the natural top. The second top was a bit of an aberration by all the technical indicators we look at. The second peak was fueled essentially by various amounts of crime and leverage from FTX, as well as speculation around the Bitcoin El Salvador thing. And we had, Terra Luna rushing the markets up and buying billions of dollars in Bitcoin. There was a lot of shit going on back then, okay? It was a wild market cycle. Eventually, we had a string of corporate collapses, revealing an ecosystem that could create major froth before eventually imploding. Now, don't forget, November peak in 2021 was only a few $1,000s higher than the April peak. So really, you could have just sold the earlier top and just walked away, man, chilled out over the summer. Maybe you come back in later on, trade a little bit, or you just enjoy your life for a few years, come back and buy the bottom at the end of 2022, bada bing, bada boom. But anyway, look at it like this. With April 2021 as the peak, we should pay attention to and the potential that this could happen again. And you had a cycle top in basically Q2, April. Now translate that to the current bull market. 11 months after last year's halving gives you a cycle top basically in March. So with that measurement, a top doesn't come actually in Q2. But anyway, look at it like this. With April 2021 as the peak back then, maybe that's something we should pay attention to. And you had a cycle top basically in Q2, 11 months after the previous Bitcoin halving. Now translate that to the current bull market, and 11 months after the last year's halving gives you a cycle top in March. So at that measurement, a top somewhere in Q2 doesn't actually seem all that early, does it? It's kind of what happened last cycle. This also ties in with market seasonality. Summer tends to be when crypto markets get pretty flat. Everybody, stops trading and goes and enjoys their time on the beach. I'm personally hoping to do that as well. You don't get huge returns. But this time around, is there likely to be a revival in the autumn like there was in 2021? Well, it's far from certain. There actually might not be any stronger triggers by then due to the nature of Trump's first 100 days. But one thing that is for certain is that you're going to have to pay taxes on any crypto gains, which is why I want to introduce today's sponsor, COINTRACKING. Thank you to COINTRACKING for sponsoring this video. Look, managing your cryptocurrency portfolio can feel like a full-time job, especially when you've been trading for years like I have. Heck, I even remember back when I first got into the cryptocurrency markets. I was so excited, but also pretty damn overwhelmed. Keeping track of all my trades, the wallets, all that stuff, taxes, what a nightmare. I had transactions scattered across different exchanges and so many wallets. And every tax season, oh gosh darn, I dread the heck out of that paperwork. That's where COINTRACKING steps in with more than 1.7 million active users, including 25,000 accountants and corporate clients. This is a game changer, 100%. Whether I need an overview of my profits and losses or whether I want to generate a tax report, COINTRACKING has it covered. COINTRACKING even supports over 300 exchanges and wallets, so I don't have to sit around spending hours manually inputting all the data, which of course sucks. Plus, it's the cheapest tool out there, and they even offer a free plan for up to 200 transactions. Pretty cool. And the tax reports? They're the most precise in the market, with support for 12 country-specific reports and 15 tax methods like FIFO and LIFO. And if you need more support, guess what? COINTRACKING's full service handles everything from the managing of your accounts to the filing of your crypto taxes. Doesn't get much better than that. So if you want to make managing your crypto easier, then check out COINTRACKING. Use my affiliate link in the description to get signed up for free. And if you go for a paid plan, you'll get a 10% discount exclusively using that link. And if you pay with Bitcoin, you'll get an extra 5% extra off. This is one tool you don't want to miss out on. Link in the description. Okay, back to it. So look, this is the most crypto-friendly administration that the United States has basically ever seen. I mean, you've got a president who drops meme coins on Solana, whose son bull posts ETH and BTC. And look, the Trump administration made a big deal about getting things done in the first 100 days. At a press conference earlier this month, Trump's AI and crypto czar, David Sachs, he talked about plans for two major crypto bills, a market structure bill and a stablecoin bill. And Senator Tim Scott, he even came out and stated that he wants to have these bills voted through the Senate within 100 days from Trump getting started as president. Pretty big stuff. But then there's also all the tariff stuff and economic changes that could actually cause enough uncertainty to see markets top in Q1, Q2. Now, regulatory clarity obviously is great and incredibly positive long term, but for the rest of this cycle, remember that often future anticipation is what fuels price gains. So when these political moves are settled, when these bills hit Congress, are probably likely to be market peaking points, especially if broader economic conditions are worsening due to trade wars and stuff like that. Basically, a whole giant buy the rumors, sell the news kind of scenario played out at the highest levels. And in the context of the current cycle, when traders are starting to look for a peak anyway, then maybe getting all the good news completed will mark a natural top for Bitcoins. Not to say that we won't get a second cycle top later in the year, especially if the strategic Bitcoin reserve bill doesn't come till later this year, then that's a likely scenario. Now, for previous examples of the ways that big events can affect price actions, look at the charts immediately after the spot BTC ETFs launch. Price dipped before, then running up after. And after Trump won the election, we got the Trump pump. But after his actual inauguration, Bitcoins traded in a range and then dipped, with altcoins basically going to Armageddon. And with those ETF launches, we were much earlier in the cycle and could confidently shrug off any kind of dips because, well, there was just so much more time to go and everyone was so hyped up by the news, by the rumor of the news, right? But think about where we'll be 100 days into Trump's presidency. That would be, of course, very deep into the bull market, with $100,000 Bitcoin repeatedly broken, markets getting ever closer to the sell in May and go away seasonal thing, okay? And if we dip after a news-driven leg up, would you really want to bet on one more move after that? Or would the more likely scenario be that all this economic stuff starts to catch up with us, that these big bills are actually topping moments, and the sell in May and go away for summer seasonality is actually a real thing? And if you're going to bet on it, do you think other people are going to bet on it? Who's going to be the marginal buyer in that situation? Let's take a look at some on-chain and chart signals as well. There are some signs that BTC is slowing down after moving all the way up from about 15K at the end of 2022 to around 100K right now. First of all, we have this view of the UTXO age bands, which show the movement of BTC supply within a particular age range. Basically, when it peaks, speculative activity has heated up, and this can mark cycle tops. Now, the peaks, of course, are getting lower each time, and the pattern suggests a 2025 top in Q1 or Q2. Interesting. Then there's this view of the BTC price in parallel with MicroStrategy's Bitcoin holdings. You can see that they move up basically together over time, except that most recently, the opposite has happened, and the lines took on a negative correlation. Interesting. And finally, there's demand growth. Demand drives price, but here you can see that since December, demand has pretty much been dropping off, all right, along with the price kind of struggling, being trapped in a range. Now that can change quickly with a bunch of US states buying and a bunch of other countries buying and more ETF inflows and all that kind of stuff, which can have that final surge push up to 150, 180K, final market peak. But still, a dip in demand at this stage is worth taking note of. But everything can change real fast, but still take note of it. Also, don't forget that we have the next Fed meeting in March coming up pretty soon. The majority expect less from it. There's not going to be any rate cuts, of course. In fact, the danger is growing for a rate hike. Markets are paranoid. This is an unpredictable environment created by Trump with his tariff wars and all kinds of stuff, right? But higher rates for longer is not typically a bullish scenario for risk on assets that already made huge gains over the past couple of years. And yes, there's very strong economic tailwinds that can mitigate that kind of stuff. And let me state again, this is just one scenario and some different reasons why this scenario could play out. There's lots of moving parts here, and you can absolutely find plenty of evidence for alternative views, including the 4-year cycle theory. Again, I think local peak, April, May, maybe, final peak after a massive crazy correction potentially in the summer, maybe even some mini financial crisis kind of stuff playing out before a final 250K peak around a strategic Bitcoin bill October, November this year. But it's always good to keep possibilities in mind. The more you know, the more you think about it, the better you're going to be able to make decisions for yourself. Thanks for watching.